Joining us now to take a look at Thursday's market movement is Michelle Schneider. She is a partner and director of trading research and education for the Market Gauge Group. Always a pleasure to have you on, Michelle. Now, markets seem to be popping, especially earlier on this deal. But in reality, it seems Congress is just, for lack of a better term, kicking the can down the road here. Does this set up markets for a roller coaster at the end of the year as we look into November and December?
Well, definitely it does set it up. We've already kind of been in a bit of a roller coaster, and if you just step back and look at the markets over the last few months, we've kind of been range bound. We hit July lows and bounced a little bit, particularly in NASDAQ, and yet we still have a lot of overhead resistance. But stepping back, I think the timing on December is so interesting because we have a lot that's going to happen between now and then to add to the roller coaster. We have the holiday season upon us. We'll be through Black Friday, which of course is always telling. And we're entering the winter where many people are predicting we can see yet another surge in the virus. So it's going to come down to these politicians, whether they want to be the hero or the villain. We're still erring on the side of some level of negotiation and some kind of deal that will be met in advance. But it's really, we know that all politicians have a little bit of both hero and villain. So it'll be interesting to see what happens by then. But I would certainly be, I don't want to use the word cautious because price rules more than anything, but I would be frosty.
Well, and you made a great point is that's after the Black Friday season, but if, say, you're one of the hundreds of thousands of government employees who is concerned about a shutdown as well, you may not want to be spending big money when you're moving into Black Friday when you know in just a couple of weeks the government could shut down. Now, we also heard from the CEOs of Citibank and JP Morgan there. Are there concerns valid about a possible debt default, even if it is pushed back into December?
Well, there's always a level of hyperbole, but basically their jobs, both Dimon and Jane Fraser, that Biden spoke to them about is to put pressure on the Republicans to not wait to the last minute so that nobody, including the market's going to be particularly nervous about a default. And whether or not they're going to be successful on that remains to be seen. But what's interesting here is that the Republicans want to avoid a filibuster by the Democrats, and what they want is what they call a budget reconciliation, which basically means that the Democrats want that issue settled now, and the Republicans want to wait, so as they go into next year, they have a good talking point for the midterm elections. So it's really kind of here we are, the United States, its people, and the markets, and the economy sort of caught in the middle, and we'll see whether or not these CEOs have any kind of influence for public sentiment to support it passing sooner rather than later.
Of course, and we know that Senate Republicans at a certain point also wanted to make sure that debt ceiling was disconnected from the budget, was disconnected from averting the government shutdown, because they want an up or down vote strictly on that. So like you said, they can go back to their constituents come the midterm elections and say, well, we didn't vote for that. They did. That's the way it works. Now, going back to the concerns heading into the holidays, we're seeing a record backlog of container ships off ports here in the United States. Do investors have this on their radar as well?
Oh, well, definitely. What's so interesting is that what's going on right now is that we have the whole notion of oil. And this really smacks a lot of what's happened in the 1970s, and that oil was sort of the X factor, and we had lots of different disruptions, including the oil embargo. And from there, we also had some political unrest. As we know, Nixon wound up resigning. We had the Vietnam War winding down. And at the same time, we had easy monetary policy, which of course then fueled this hyperinflation. So if we fast forward now to this time, we have the COVID as sort of what's really here a new X factor, because oil is rising with these supply chain issues, and natural gas is rising, which is affecting food prices. So we think that this could really affect the bottom line for a lot of companies in terms of their profits going into QE3, raising prices, and also with the labor, even though we have jobs number coming out tomorrow, I don't expect a huge surge in the labor force as we're going. But we can talk a little bit more specifically on the supply chain, if you wish.
Michelle Schneider of the Market Group. We'll do it next time because, unfortunately, we are out of time. Michelle Schneider of the Market Gauge Group, thank you so much.